Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition.
Kind of meandering here, but still down on the day, roughly about 50 bips. Not a whole lot has changed since we started the show. 69.41 is the ticker right now. I got Mr. Phil Strebel joining me from Blue Line Futures, Chief Market Strategist. Phil, great to have you on. Good to see you again. What's up, man?
Yeah, thanks for having me. A lot of volatility in the market. It's been neck breaking here, and it's amazing just the ranges that we're seeing across the board. Precious metals, we're getting some geopolitical risks going on. We got crude oil prices pushing up. Seems like a 1-2 punch in a lot of different markets. Cryptocurrencies under a lot of pressure in U.S. equities, but some of these markets are coming back, but it looks like the crypto's left in the dust right now.
It is, yeah. S&P is kind of fighting to get higher to 69.50, but you know, Bitcoin is at the lows of the day, so just again underperformance. When does the crypto as a portfolio diversifier pitch start to take on water, Phil? I mean, I kind of think it already has, but of course, I'm kind of expecting
I really think
that.
so. I think so as well. And, you know, if you look at the top, when MSTR, that was the leverage play on the cryptocurrencies. And once they launched the options contract on Bitcoin, that marked the top in MSTR. So you see this market here, and there's just not a lot. I mean, people are going for the hard assets. I mean, as seen in the precious metals and things like that, maybe crypto has moved on, is going to sail off into the sunset. Who knows? But you know, we'll have to see. You look at the correlation between the dollar and Bitcoin, they're positively correlated. So as the dollar continues to sell off, Bitcoin is selling off with it. So that's something to note as well. Well,
Yeah.
The gold market has a pretty strong inverse correlation.
Very good point. It just kind of seems like Bitcoin's getting dragged in almost all macro environments the last 12 months. And by the way, I know that people say, hey, well, we just put in a high in October. I get that, but for anyone who's watching the show and following me, I've been pounding the table on the bearish divergence that's been going on for years. So even though we did put in new highs, it was on lower and lower momentum, and the breakouts were smaller and smaller. So my point was that's kind of how it looks like. Something that you sell the next guy, that's how it would peak out to me, because you just eventually, you get to a new price, but it's increasingly difficult. That being said, Phil, we're still in the 80s. So how do you trade it? I mean, should we try and buy this dip here in crypto and trade this range and just be quick about it, or what?
I don't think so. I think that people are getting a bit of a wake-up call, and the reality is setting in that this product is not keeping up with many other things. They refer to it as digital gold, but they couldn't be more the opposite. And you look at Bitcoin the last few days getting over 90,000. It seems like traders are lightening up on any kind of rally in Bitcoin and trying to rotate in other asset classes, whether it's copper, gold, silver, even the Russell 2000. I think all of these have much more prospects at the moment than Bitcoin does.
Okay. All right. So BTC, hesitant to buy dips. I do think that just from the chart, there could be some nibbling. And if it doesn't, boy, it could get nasty. I mean, what happens if it breaks 80K and goes below Masters break even?
That would be
it's like
significantly problematic. I would have to, then you're going to see that grab headlines where it's like those guys are on margin call. Those guys are having problems. Their investors are filing lawsuits. Things like that. The product doesn't seem as what it seems. So, we'll keep an eye on like Tom Lee and that BMNR and other crypto plays out there.
Yeah. All right. Let's talk about the stuff that seems to be strong. Silver up another $1.10 today. And you, I think, pinned the tail right on the donkey last time we talked, because you said it'll probably hit triple digits the next day. And I believe that was the day it did, right? That was last Friday, I think.
Yeah, it did. And then if you look at the way that it broke out to the upside, it went from like really the $50 breakout on up to 82. That was a $32 range, consolidated in the 80s, then finally formed this pennant and broke out, went up another about $32 from there. So it's like that 114 to 120 mark, and that's where we got to. A little bit overextended in the overnight session. Something that we've seen is that there's a lot of story, a lot of hype out there. Hong Kong residents, they are leery to buy gold. It's gone too far, too fast, too high. They're buying silver as the alternative. People were even buying copper bars, which, good Lord, I couldn't imagine that one, because a pound of copper is only worth $6. It just doesn't seem it's worth storing around there. But a big move in copper. That was kind of the rising star today, up 6%. So playing catch up to the other metals. That has been the slow and steady metal, but it really gathered some steam. Something that we've been monitoring is those ETF flows, and the ETFs, they've increased gold holdings for 6 straight days while they continue to cut silver. And silver has not turned positive as far as ETF flows this year. Since peaking last December, they've been just cutting it. It tells you that perhaps with the silver market. So
Okay.
silver volatility has gotten too great for people in their portfolio, so they're trimming their ETF holdings just to beta adjust size the position.
Okay. Yeah, the ETF flows are kind of interesting, right? Because they don't have to correlate with price, but if there's a big price movement and flows haven't responded, you do kind of get a little bit of a taste of sentiment, there to where there might have to be a little catch up from sentiment.
We were watching like last year when there would be big dips and there was like a huge sell off in the silver market, and then you'd see a massive 8 million ounce inflow into it. Well, the dip buyers were actively present. Now I think that people are scared of this volatility and they're lightening up. So you can get this perception when you are analyzing that market as closely as we are, you get a finger of the pulse of what's going on in there.
Yeah. Okay, so silver, it sounds like in your view is you still want to be buying dips in this. If there's going to be flows that kind of got to catch up, how do you see it?
From a futures standpoint, it's going to be more challenging. The exchange is going to launch a 100-ounce contract, and I think that will bring in participants back into that market from that standpoint, because the reality is unless you caught that wave up, it would be much more challenging having an account that's, say, smaller than 50,000, because that's the margin requirement on a 5,000-ounce contract.
Yeah, okay. Also, it seems like there's kind of a chart beginning to develop a little bit technically with some resistance, but we pushed through it. Even today, just earlier in the day, fresh highs. So I don't think it's a bad looking chart. Maybe there needs to kind of have another consolidation period, because to your point, it has taken those moments of sideways movement, whether it was from Jan into the end of that month, if it was late December, kind of through the beginning of the year, but all those were just periods before it then broke out further.
Yeah, if you get a consolidation, then you're going to see, because I've been dealing on the physical side of things, you'll see some of these different wholesalers, buyers, coin shops, they'll start taking inventory back in because they're comfortable with the price action. Right now, a lot of them are hesitant to buy anything on the physical side because of the fact that you're seeing an average true range of $7-8 a day. Today we've got almost 2x that. Juicy. So, yeah, so we need a little bit of stability in this market is what I'm saying.
Okay. All right, so we need some stability. Maybe it'll slow its roll a little bit. Seems like all the options flows are still pretty bulled up on it. Gold, it seems like similar in terms of the intraday volatility, Phil, but also just significantly less downside chop as well. It feels like it still is pretty pure. But eventually, doesn't this have to? What if yields finally rip? Right now, gold didn't care about the 10-year going above 4.2. But what if it really takes off? What if we do get, a guy who's just going to slash rates and turn this economy hot?
You'll see more steepening of the yield curve, and the 10-year yield is pushing on up here. And I think that's a lot of foreign buyers here really just questioning buying long-term treasuries in the U.S. with the fiscal problems, the rising debt, and things like that. If you look at the short end of the curve, which is much more what the Fed is able to impact, that's starting to drop. So you get the steepening of the yield curve. I think that you look at central banks and stuff. We've got the problems that went on with Venezuela. We've had Russia. We have it seems like some renewed geopolitical tensions with Iran. It makes sense for people to continue to stack into the gold market for that safe haven play. Central banks also are not as price sensitive to the movements in the market, so they're just going to buy systematically and almost dollar cost average. So I don't think that they're impacted by these higher price levels.
Okay. And also, yields have been pretty calm here since moving through. We had a couple nice fat candles as the 10-year broke through 4.2 to the upside, but it has calmed somewhat. Even the dollar, after getting obliterated, is doing kind of one of these little triangle patterns where the last 2 days of trading have been within the big candle from the breakdown below 97 bucks. So give me the best kind of thing to set up for next week, Phil. Take me through what looks most interesting to you then here.
Well, I'd like to see any kind of weakness in the precious metals market where new participants can come in. I think copper is still one of your best bets, one of the most reliable ones right now. If we can get some kind of dip below $6 next week, that would be fantastic, in my opinion, provide some value. I do like the Russell to the upside. If you look at those companies have reported an aggregate growth, 200 of the Russell 2000 companies of 23.2%. So, and we're seeing this broadening here in those markets. So copper and the Russell are the ones that I bang the table on. I like the gold market, but again, you got to position size properly. They got 1 10-ounce, 100-ounce, 50-ounce, 33-ounce contracts on the future side. So you have a lot of flexibility there. Silver, you got to wait for that smaller contract to be in play. So we want to watch the dollar index, watch earnings, watch everything else. And, know that it's not just one thing that moves these markets, it's everything.
Dollar. Fitting right into the no metal left behind thesis, I think, Phil. That's what it is. No metal left behind. Copper's coming along for the ride. It was gold. It was silver. I do like the look of copper. Pretty nice candle there. It did also kind of look like it was going to join the rest of the crew with the dollar as the underpinning denominator to that conversation. Nice eyes on the futures as always. Thank you, Phil Striebel. Have a great weekend.
You too, bud.
We got to get through tomorrow trading too, but Tuesday, Wednesday, Thursday. Phil Striebel, Chief Market Strategist of Blue Line Futures. All right, we got
Futures
Mr.
trading
Scotty.
involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition. All information, communications, publications, and reports, including this specific material used and distributed by Blue Line Futures LLC, shall be construed as or in the nature of a solicitation for entering into a futures transaction. Blue Line Futures LLC does not employ research analysts or maintain a research department as defined in CFTC Regulation 1.71.